Guys, this is an update on Bitcoin. In our last update, we had a new red pattern setup that was looking like potentially a crash setup. I called it the anatomy of the Bitcoin crash. So that pattern sticks, and it has actually officially become my primary pattern. We actually broke some supports to get to that pattern. So before I move on, I am pasting some links into the description. So feel free to check out these charts up close on your own time by clicking those links. So in our close-up view here, this is the new chart that I had put together to clarify things. We were looking for a little bit lower just to complete what we were calling the fifth wave. And we had a pretty strong support at the 39,500 mark. And that was actually, well, you can read it right here. There's a big caption stating that we need to break through that. And we more or less got there. I think we got there, we got down to 39,500, something like that. So we officially broke it. So in Elliott Wave Theory, the things that'll break a bullish pattern are seeing an impulsive wave that breaks support. So those are the two things. It has to be impulsive and it has to break support. So we have a first wave down, and well, this is why I'm adapting the red pattern. So before, in our last video, I was pretty close to 50-50. I'd say that I'm probably 60-40, maybe 70-30 leaning on the red category. It doesn't mean that the bull is dead. Things could change. If we can rally five waves right up through the all-time high around 68,000, 69,000, then the red pattern may very well be dead. We'd have other alternate patterns, but right now, based on the numbers I'm seeing, based on these parameters, the red pattern is my primary. And the same applies in Ethereum. We have seen similar developments there as well. I think Ethereum fell even deeper than that. We broke down well below 3,000. We bottomed around, what, 2930, something like that. So same kinds of patterns we're seeing in both Bitcoin and Ethereum. Ever since that happened, we did start to pull back up. So as I mentioned in our last update, I would expect a deep wave to bounce. So we're nowhere near where an A wave could potentially be. So we're gonna have to keep an eye on this. However, there are signs that we have bottomed. So when I zoom out a little bit, this is the daily view. You can see that there's an MACD divergence. We had a deep stretch. Basically, we were very oversold at the bottom of what we were calling the third wave, which happened on December 3rd. And our lower low that we had in recent days over the past week led us to a less low MACD. So you see a divergence. You have a lower low in price, but you don't have a lower low corresponding to that in the MACD. So that's a sign that we have a local bottom in place. Whether this is the bottom and we're completely done, or this is just the bottom of the first wave in a much larger crash, is yet to be seen. But like I said, right now I am adapting the red pattern as my primary. This could easily be also interpreted as an A, B, C. So like I said, that pattern's not completely dead. Just because we've shifted to the red pattern as the primary doesn't mean that we can't go bullish pretty soon. So what am I expecting in the next several days or weeks? Well, we have broken support. We are rallying. It's nothing particularly impressive yet. We've had some pretty good days in other cryptos, although today, January 13th, local time, we had a bit of a pullback. We had some pretty explosive movement in some of the altcoins that I've highlighted in some of the other videos. We're not seeing quite as much action in Bitcoin. So I'm still expecting to see more of a consolidation and more of a rally as we go further forward. Like I said, our wave two could go up to the $56,000 mark, could go as deep as 60K, maybe even higher than that. Like I said, if we see a five-wave impulse up, that could be a strong sign that we're not going to see the crash after all. We'd have to see a three-wave pullback after that to confirm a second wave, like a corrective wave two, in order for us to launch in a bullish fifth wave. So until I see something like that, the red pattern will remain our primary. And just as a refresher, if we get up to that point, maybe a good point to exit if you are concerned about the crash, depending on your crypto investing strategy. If you're a long-term investor, if you bought into Bitcoin years ago when it was well below $10,000, you know, you could do that. You have such a low cost average, you might be ready to weather the storm. You're planning to hold for the next 10 years. That's fine. As for me, I won't necessarily sell right at this point if we have this bounce. There's a good chance that I'm going to use a basically multifaceted plan with different tranches. As I mentioned, we'll have an A wave bounce first. And typically, I'm going to zoom up a little bit to make this more clear. A waves are in a three-wave format. So you'd expect to see an A, B, C within this A wave. So that would be the fractal copy of what we'd see on the bigger pattern as well. We'd expect a three-wave up. So my point is this A wave that I'm calling a wave may actually be all the wave 2 we get. That would be a good time to unload some of it. Maybe I unload half of my Bitcoin holdings, maybe a third, not completely sure yet. I'd wait for another corrective pullback, which would look identical to potential wave 2. And then we'd be looking for an impulsive 5-wave structure up to this region. At that point, I may unload maybe another quarter, maybe another third, and then I would finally be looking for some kind of a pullback there. So ideally, you'd see a 5-wave impulse down. That would be a very clear sign that this third wave of our larger C wave has started. At that point, there'd be some Fibonacci support levels. I might unload some there. So I'm going to detail all this stuff out as the situation develops. Right now, like I said, things are looking not too different from last time. The red pattern is now my primary, but that doesn't mean that it's guaranteed. If the parameters change, my mind will change too. That's how Elliott waves work. You never get too attached to the pattern that you want to happen because the market does what it wants. So to keep getting my updates, don't forget to subscribe. Going to guide us through the maelstrom that may be coming, or maybe we have an awesome bullish 2022 in cryptos. And don't forget to like if you enjoyed my video. Until next time, thank you for watching and happy trading.